In this video, I'm going to explain to you guys banking crisis and how banks make money. Now, of course, you guys have asked me to explain it to you in a very simple way. So let's take the following example. Let's say that you take $100 to your bank and you wanted to deposit that money in your bank. Now, the bank doesn't keep that $100 in the bank. It needs to make money. So this is how it makes money. Firstly, it is going to give $85 out to its customers for mortgages. Now remember, this money remains illiquid because you can't really go and then sell and buy property in a day, and you can continue to do that over and over. Hence, this is illiquid. $5, it will invest in something which is deemed as the most secure asset, and these are your bonds. So it will invest $5 in that. Generally speaking, this interest rate and bond prices are negatively correlated, meaning when interest rates go up, bond prices go down. $10, it will keep in the bank for cash withdrawals. Now, under times when there is a lot of panic and consumers do not trust that the banks have enough money to pay, because remember, they only got $10 to pay, the rest is all gone, 85 in mortgages, 5 in bonds. So they go and then they begin to withdraw cash out of those particular banks, such as regional banks. We've seen that First Republic, we've seen the PacWest, we see a lot of banks coming under pressure in America. Now, what the bank does then is that it goes out and then it tries to sell bonds. The problem, remember the $5 that it invested, the problem here is that central bank, the Federal Reserve over in America, and of course in the UK, the Bank of England, other central banks, they have all increased interest rates. When they increase interest rate, bond prices goes down. Now they have less money to honor their commitment. This is where the banking crisis becomes very difficult. And this is the situation that we face in America. We have less cash withdrawal money, which is sitting there. In addition, the bonds, the secure assets, they have lost their value. Mortgages, of course, they are losing money, and we're going to see quite a lot of defaults in that area, but that's a completely different conversation. But because of higher interest rate, bond prices have gone down. There's a panic in the market, and because of panic, people are withdrawing cash out of the banks. That is what creating the current crisis. Tell me, do you understand?